Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
Eric, Bitcoin has had a year. ETFs contributed a huge part to that. There's this other asset class, though, that maybe was the original Bitcoin called gold.
Yeah.
And gold has also had a hell of a year.
Yeah. Bitcoin is called digital gold. They even call it that. And it's interesting, these two camps are constantly at war, but they have a lot in common, in my opinion, from my sort of objective view. They're both about storing value. They both think the government debases currency. The one big difference is Bitcoin's very volatile. I've always called Bitcoin like teenager gold. It's because it's literally 16 years old and gold is 4,000 years old. So to me, it's weird. It's almost like gold is looking at itself as a little kid. So I think they should get along, but in a portfolio, they play different roles because they move differently to stocks. But this year, Bitcoin ETFs have taken in so much money, right? And gold is up a lot, but hasn't really taken in flows. So there is a bit of like Bitcoin stealing gold's thunder as like the store of value, or it would appear.
All right. So to actually debate all of that, Bloomberg hosted an ETFs in-depth event here at Bloomberg headquarters in New York on December 12th, and we moderated a panel. On that panel with us was David Lavalle, who's the global head of ETFs at Grayscale, George Million-Stanley, who's the chief gold advisor at State Street Global Advisors, and then Simeon Hyman, who's the global investment strategist and head of investment strategy group at ProShares. This time on Trillions, the crypto versus gold debate.
Today we're moderating a knife fight, so welcome. We're going to talk about gold versus Bitcoin. We got Simeon, David, and George. So as Eric and I talked about this, we were like, how do we have, that part of Anchorman where the different networks go have like a street fight? We were like, let's have a street fight on stage between gold and Bitcoin. How much do you guys hate each other?
It's really, we were just saying, I hope we weren't going to fight. George and I worked together for a long time and have a deep mutual respect for one another.
Not anymore.
No, I think it's a mischaracterization. There's a spot for gold and Bitcoin in everyone's portfolio, I think.
You just made this so boring.
How could you do that at the beginning? We were supposed to work to it.
Yeah. Well, I think there is, but no, I have respect for both of these guys.
But for real, there's so many things that you do sort of probably see eye to eye on. You like both hate the government. You're a hedge against inflation. Like distrust of everything. But then, like, what's the thing that you all really can agree on?
Am I on the right panel here? I'm not sure. Not sure I recognize myself in any of that.
Okay. Well, it's been a good year. Everything has gone up, especially for crypto and gold. It's
been a fun year. The S&P's up, Bitcoin's up, gold's up. It's an amazing year. I love it.
The flows for Bitcoin are way bigger than gold. How does that feel?
For this year? Yeah, no, look, I think that there are plenty of other ways of investing in gold. There aren't that many ways of investing in Bitcoin. So I think that that the other ways of investing in gold have benefited probably to the detriment of ETFs. But it's interesting to see that in the last few months, we've started to see some sizable inflows coming into gold ETFs. And I think that to my mind, makes a lot of sense.
And do you view Bitcoin flows this year as a gold guy, as like, oh, it's just, shiny object, new plaything? Or do you think those flows are store of value flows that are buying to hedge against currency debasement like gold would?
I'm not sure I see Bitcoin as a store of value. I think that's a question that I hope that we're going to get into. But I think that the main reason why people have been buying Bitcoin is because they're chasing returns. The returns have been stellar in the 15 years that Bitcoin has been around. I don't know that that's a long enough period to draw statistically significant conclusions on. I love representing an asset with a 6,000-year track record. But I think that gives me a confidence that some of the things I say make more sense.
Jump right in. Those are fighting words.
Listen, I'm just glad I'm not on a panel to have to talk about spot versus futures ETFs. However, I would like to let everybody know that reports of our demise are greatly exaggerated. We have $5 billion in our crypto suite. BITO is at 2.5, and BITU, the 2X, is over $1 billion, and we even have $500 million in the mutual fund, BTCFX. So there's utility there, and it's important stuff. But what I think about, everybody says it's chasing returns and Bitcoin is a risk asset. And I just go back to the regional bank little mini crisis we had, and that was crypto-related banks. You know, that month of March, almost 2 years ago, the S&P 500 financial sector went down 20%, and Bitcoin went up 10. Go no. Maybe it's not a risk asset. Maybe it's a diversifier, which is, I think, what some of the folks who maybe aren't chasing so much do see it zigging when other things zag.
Yeah, I think it depends on the other things that zag. I think one of the things that that I'm a little concerned about with Bitcoin in its short history is that when Bitcoin was launched, there didn't seem to be any relationship to the stock market. In the last few years, I think a significant correlation has developed with the stock market, and I find that concerning when the Bitcoin guys, you and Dave, are out there claiming that it's
I'm a gold guy too, so I'm on your side too.
I'm delighted to hear it. You're very welcome on my side.
But it's interesting, though, Bitcoin and gold aren't correlated.
No.
That's kind of cool.
We don't see a relationship at all between them, you know.
I would say that Bitcoin means different things to different people, and therefore it has a different place in different investors' portfolios. And so those...
You're so mature now.
No, so those that are seeking an opportunity to invest in something they believe is a disruptive technology can do that and can make an allocation to a spot in their portfolio that's a risk asset. And for those that are gold bugs that really feel in debasement of currency and all sorts of other characteristics of store of value, have an opportunity to make an allocation to their portfolio that might otherwise be put to place where their gold allocation is. So I think it's very early in the life of this asset. I think when you take a look at some of the liquidity characteristics of it and the general properties of ETFs, democratizing the investment, validating this type of investment, it's incredibly bullish, but it's very, very early. And so we haven't gotten to the, if you have dials on a radio, you have the big dials over here and the little dials. We're still in the big dials. Do I want to invest in this or don't I want to invest in this? And some of the debates that we're willing to have here are the smaller dials over here around, other characteristics.
So one of the ways to define Bitcoin, and the Gary Gensler and the SEC had to deal with this, was, is it a commodity or a security? Dave, what would you say?
What's a commodity?
Simeon.
It's a commodity, and it differs from Ether because Ether's got staking yield, and that makes it a different animal.
George.
Still a commodity.
I think commodities have practical uses in the world. I'm not sure that Bitcoin actually does have that. It can be a fine investment if return is what you're looking for. But I'm not really sure. I tend to lean toward the Gensler view, which was that Bitcoin is probably a security.
So hang on for a second. So
all right, here we go. Finally.
I don't disagree with you when you talk about the properties of Bitcoin not really having usefulness when you're in a country that has a monetary policy and a dollar that can be relied upon. If you were to go to a country that has hyperinflation, or if you were somebody who really needed to rely upon a transfer of fiat currency across borders with a high degree of confidence, with speed, with flexibility, with just an internet connection, and needed to kind of move money to, let's say, a family member halfway around the world, I think you would probably say it has tremendous utility. It's just in the U.S. market, this happens to be a transformative technology where the first application of that transformative technology doesn't have a great utility here. So it would be like, the internet showing up and, email being useless to me. It just happens to be that the first practical application of Bitcoin is something that doesn't have utility to you or me.
Okay, with respect, Dave, as always with
Of course,
respect. Yeah?
the most respectful guy I know.
I'm definitely going to disagree with you there. I think it's probably not helpful to your case to bring in the El Salvador example, because the response to El Salvador basically adopting Bitcoin in a very, very big way was that the IMF said basically you are never going to get $1 of IMF help unless you actually abandon this stupid policy that you embraced. I'm not saying it's a stupid policy, but the IMF is somebody that I do pay attention to.
Respectfully, not saying that it can be utilized as a national currency, but if I'm sitting in Buenos Aires and essentially I can get a 2-to-1 conversion ratio on the Argentinian peso if I use actual US dollars, they need something that is going to hold its value much better. I'm not suggesting it can be utilized as a national currency. I'm just saying that despite its volatility characteristics, it is very volatile, but it doesn't devalue. And so they have something that they would rather have that volatility, but know that it's going to have and hold its value properly.
I forgot to bring the popcorn. This is like, it's.
Or you can carry gold bars around and try that.
Yeah, I was going to say.
That's your alternative.
The aluminum Samsonite briefcase, like, it's like very transformative.
How much gold you got?
So I want to ask, President-elect Trump has indicated that there could be something resembling a Bitcoin stockpile. George, do we put that right next to Fort Knox, or is there another place that it goes?
It's much easier to store.
Is there an it that you need to put somewhere? I mean, isn't this all up in the air?
George, come on. 20 years, and for like the past 15 years, people are saying, is there gold in the vault for GLD and GLDM? We have pictures of you in the vault. We know there's gold in the vault. It's a 33 Act Delaware Grantor Trust, exchange-traded product that holds the Bitcoin. Same argument.
I think he sent us, because we're a 40 Act fund, and in case you can't use a grant or trust, then you should know that BITO is indeed a 40 Act fund.
Don't worry
This
about
is the
it.
weirdest knife fight I've ever been to.
It's very cerebral.
Nerds knife fighting. Okay, Dave, back to this. I think what George was saying is that we don't know if the Bitcoin's there, and I know you guys, you have something in common there. The hardcore people question that. I think he's saying it isn't even a thing, so why on earth could it be a reserve, right?
Look, I'm not saying that it's a bad idea. I think the problem is a lot of people have taken what the president-elect said out of context completely, not for the first time in his case. A lot of people have suggested that maybe he's planning to sell some of our gold reserve out of Fort Knox and replace it with Bitcoin. He never said that. I hope he never does. I don't think that would be a good idea. But if he thinks it's a good idea to stockpile some Bitcoins, I'm certainly not going to be the person to argue with him.
I mean, there's more analogous stuff here than there are differences, I think, which is going back to how you started and sort of front-ran it. Gold is the thing that doesn't really have.
Time out. I didn't front-run anything.
Sorry.
That's a bad word. I don't front-run things.
Perhaps it suggested a unifying conclusion
His lawyer's here.
at the front end of our conversation. But gold is the thing that doesn't have the industrial use for the most part. It's not copper. It's not silver. It's a store of value. It happens to have a physical thing, and if you went through the financial crisis, then you were wondering, did you have your own bar of gold? Did it have your initials on it? And all that crazy stuff. But it's around for a long time, and one of the ways that you can see how well-functioning gold is if you look at the gold futures market, and you've got the Bloomberg index, the gold sub-index. If you look at it, this is a little in the weeds, you can look at the regular one, but look at the one that says TR on it on your terminal. That's the fully collateralized guy. And that means you hold cash with your futures, track spot, absolutely spot on. What does that mean? Gold is the future of Bitcoin. Like they are so similar. I would argue they're much more similar than you guys are suggesting. But what is cool right now is that they really aren't correlating. Bitcoin's got a 0.3 correlation to the stock market, something like 0.2 to bonds and 0.1 to gold. That seems to me kind of a useful thing in a portfolio.
Yeah, 0.3 correlation to the stock market would worry me. Gold's correlation to the stock market is 0.03. In other words, statistically nothing. Correlation with the bond market is bigger. It's 0.09. Statistically, that's still zero. That's what I like about gold's a lack of correlation with the assets that you'd find in a typical portfolio. Bitcoin, I'm afraid, does correlate a bit more, so I don't think it's offering you the same kind of protections. And I think the first reason why people turn to gold as an investment is because of its protective capabilities. It's a good diversifier in a portfolio. It has a long track record of offering some protection against sustained high inflation. Not sudden moves in the rate of inflation, but sustained high inflation. It's got a good track record as offering some protection against a sudden downturn in the equity market. Think of Black Monday in 1987, dot-com bubble bursting in 2000. Think of the global financial crisis of 2008, COVID in 2020. There are plenty of examples. It also has a good long historical track record offering some protection against currency depreciation. So all of those things put together, I think that that's the principal reason why people turn to gold. Now, sometimes gold will offer you not just protection, but it will offer you protection plus performance. And in my defense here, I would cite 2024, when the gold price is up 33% year to date. I think protection plus performance is a very, very powerful mantra, and I don't think that Bitcoin can actually match that mantra right now.
I think protection plus performance is actually exactly what Bitcoin would provide you. And I would say that all those characteristics you talked about, inflation protection, currency debasement protection, all those things are properties that Bitcoin actually does. In the case of inflation, I think the inflation properties of Bitcoin is half of that of gold, doing a better job of protecting against inflation. And I think that
Do you have any evidence for this, Dave?
My
Or
research
this
team
is just
does.
your thinking?
1% versus 2% is what I've got from my research team, but we should have to talk about that more, I guess.
Yeah, when I say inflation, I did stress sustained high inflation. Gold comes into its own when we have inflation for more than 2 years at more than 5% a year. We didn't have that in the most recent round of inflation. Gold was going up for different reasons. It wasn't chasing inflation.
So let's take if 2 year is a time horizon.
Minimum
you want,
2 years.
Minimum 2 years. So let's take a look at the return profile over minimum 2 years against gold against Bitcoin. I don't think you're going to find a 2-year period. I haven't looked at this, but I suspect you're not going to take a 2-year period where you have gold that's outperforming Bitcoin.
I'm happy to accept, with respect, that Bitcoin does in fact demonstrate superior returns to gold in the short life that it's had, provided, of course, we leave out 2022, which nobody really wants to talk about.
2-year period.
On the Bitcoin.
We've gotten a couple of bad years, don't get me wrong. 8 out of the past 11 has been the number one performing
It's like
asset.
somebody said about the Chicago Cubs, any team can have a bad century.
Okay, can Eric and I ask a question?
No.
I know. I'm so glad there wasn't a prep
Are you
call.
carrying a knife, John?
Probably. Let's check him.
Okay, so let's talk a little bit about this idea of putting this stuff into an ETF. You know,
Oh, yeah.
what I've found is when I tweet about Bitcoin, there are definitely people who come in and go, oh, this is like against the whole idea. You're centralizing something that's supposed to be decentralized. And the same with gold. Okay, I think that there's going to be like real like apocalyptic scenes out there. Society's going to collapse. I want gold in my basement. And a lot of Bitcoin people, I will call these the extreme types, the ETF defeats all that purpose in that the government could just confiscate it. I guess my point is, how much is
That's
the
why we keep it in London, by the way.
Yeah, that's right. Well, there's one gold ETF that keeps it in Switzerland, which is like next level. But what about this idea of, is an ETF against the spiritual foundation of both of your
So
commodities?
I think we are going to be really, really aligned. So this guy was in the room when it happened 20 years ago. I happened to be in the room when it happened when Bitcoin spot products came to market. And I think there were naysayers, and we've talked about this, naysayers, the gold bugs were like, this is insane. And there are lots of naysayers in the Bitcoin market saying this is also insane. But what the gold bugs and the Bitcoiners really loved is that as a result of this democratization of an asset and putting it in this wrapper, that the price performance as a result of it, because of that democratization, was incredibly bullish. And I think that they would both agree. They wouldn't want to admit that it helped, but I think the reality is that it did.
I don't think anybody made that sort of complaint when we launched GLD 20 years ago. I think most people were very happy that what we had done, in the words of Bob Pisani, if I may mention his name in these hallowed precincts, we had taken the friction out of investing in gold. That was what Bob Pisani said. We democratized it in the same way that the launch of spot Bitcoin ETFs, I think, helped to democratize that. It was an advance on what you guys have. Let me put it that way.
You don't need to be using the utility of the underlying investment for the ETF to be meaningful. I don't drive a tractor, but I might want to invest in John Deere. The fact that it has an important use, and we're having a little debate here, but if for those of us who believe that there's an underlying use for the blockchain, for Bitcoin as a store of value, remember it's got fixed supply and all that stuff, whether you're going to use it in an apocalypse doesn't matter to me as an investor. There's lots of things you own that you don't need the underlying utility for. So I think that's almost a diversion from what most of us are thinking about as to what will it do in my portfolio.
I think you're blending blockchain and Bitcoin. I still think of them very much as separate entities. And you guys know much more than I do about this. I think that blockchain technology has never been hacked, unlike various exchanges that have traded cryptocurrencies, or unlike various wallets that previously contained cryptocurrencies. The blockchain has never been hacked, and I think that is an incredibly important contribution to society. I think that blockchain is a solution, and I think what it's looking for is a problem. I'm not sure that a currency is actually the problem that blockchain can resolve. I think there's a lot of other things that blockchain can do too. I'm looking at investing in companies that are going to gain from growing use of the blockchain rather than me looking directly to invest in Bitcoin.
Well, but that's not dissimilar to wanting to own oil and an oil company. Mm-hmm. They're both very important and valid investments. So I don't think it's an either or in this case. 100%, there are tremendous opportunities in companies that are leveraging the blockchain. But there are also opportunities to simply own Bitcoin as a store of value.
Well, but different people want to invest in different things in different ways. You're going to want people who are going to want to own gold and keep it in their vault. There are people that want to use a financial product. There's people that want to own, mining companies, or those that are actually using gold in their for commercial uses. The same is also the case for Bitcoin.
So, Eric, you raised the specter of Armageddon. I think we ought to tackle this one a little bit. I happen to be an old-fashioned guy. I believe that there will always be a New York Stock Exchange where I can trade my GLD or a successor body. I believe there will always be a vault at the bank of HSBC in London or a successor vault where we can store GLD. And if somebody is going to come through that door with a machete between his teeth and evil in his heart, the metal that I'm not going to try to beat him to death with a gold bar. The metal I'm going to want is lead encased in brass and something to project it with significant velocity toward my assailant.
George, I'll bet on running away, and if you get 100,000 in gold, I'm going to beat you with my 100,000 in Bitcoin.
Yeah, you don't have to be able to beat the assailant. You just have to be able to beat me, and I think you've done that very, very quickly, my friend. My next appointment is with my cardiologist.
All right.
Wow, we've gone so many places.
Yeah. Okay. I want to talk about allocation, right? Because BlackRock put out a report today saying that they recommend 1% to 2% allocation if you're going to do it. They said they get a lot of incoming about IBIT, and so they just said put it out there to stop all the phone calls. But the Bitcoin people, I can see in my Twitter mentions, are like 1% to 2%. They're like, it's like Zoolander. What's this, Bitcoin for ants? A lot of these people are all in. They think the stocks in the bond market are the scam. I've also heard with gold, 1% to 2% isn't enough to really do much.
So here's my question to all of you. It doesn't make a mathematical difference to the performance of a portfolio, which is the only way to judge anything.
Say I'm a Iowa-based advisor. I'm middle of the road. I come to each of you and I say, I'm interested in your gold or Bitcoin. What percent should it be of my portfolio? Start with George.
Okay. The literature suggests that any portfolio can benefit from a long-term strategic allocation somewhere between 2 and 10%. And if you are experiencing or anticipating a period of exceptional volatility in the markets in general, then you can double your allocation. 2 to 20%, that's not very helpful. But every financial advisor is now legally required to know his or her customer, and they can help to figure out where on that 2 to 20% spectrum an individual exists, because people have different tolerance for risk, people have different needs for liquidity. There are all kinds of different needs that investors have, and it's up to the financial advisor to know the customer and to know where they fit on that 2 to 20% spectrum.
Can Bitcoin coexist in that relationship?
I think Bitcoin can coexist in that relationship. The one thing I would say is that if you are going to chase returns by adding Bitcoin to your portfolio, because I think that's really what people are doing paramount, then recognize that you're increasing the overall volatility of your portfolio. So look at your risk off, look at your hedges against portfolio volatility, like gold, and give due consideration to maybe upping the gold content at the same time that you're adding Bitcoin to the portfolio.
That's pretty ingenious.
They can coexist.
So gold is a hedge for your Bitcoin.
I think it's a good one. I think it
That's
can
pretty
be.
good. You should run with that's pretty, and that is a great troll for the Bitcoin crowd. They'll all go nuts.
I'm just waiting to go last, so go ahead.
Risk-adjusted return, 5%. Obviously, volatility characteristics, but using Sharpe ratio, 60-40 portfolio, 5% of Bitcoin is what our research team recommends.
Yeah, I think the important thing that we all agree on, and the facts are clear, is that Bitcoin is more volatile than gold. Yeah. Number two, both of them have not so much correlation with stocks and bonds. We can quibble about that, but certainly lower than even like emerging markets or things like that.
Oh, yeah.
So mathematically, the thing that's the most volatile, you only need a little bit in a portfolio to increase portfolio efficiency. So it's easy to defend 1 or 2% for Bitcoin. And yes, because gold is less volatile, for it to do anything to contribute its diversification benefit, you'd need a little more.
You don't need me. He's doing my job.
So we have both funds. We're good. We got gold and Bitcoin.
I was worried that if you could coexist on a stage together. Now I know that you can coexist in a portfolio. So this is good. I want to ask about President-elect Trump again. And here we are heading into a new administration, many changes. What changes are happening at your company? Simeon, go ahead.
What changes are happening?
Yeah, how are you preparing?
For the most part, we're just writing our market outlook and thinking about what the best solutions are. We're all in the same boat together. We're looking at the equity markets and seeing what the impact might be from expansionary fiscal policy, what tariffs might do. We're looking for what the impact of regulation is. Like interesting conundrums like, well, if there's less regulation in energy, but if it's drill, baby, drill, how do I figure things like that out? I think for almost any policy opportunity there are two sides of it. Even if you knew exactly what the policy outcome was going to be, the impact is still ambiguous, and that's the challenge of 2025.
So we're a firm, Grayscale is a firm that's 100% focused on crypto. We're the largest crypto asset manager in the world. The Trump administration is seemingly going to be more favorable towards crypto, and that's the way the market is reading it. So we're going to continue to be innovating and launching more products in the form of single asset products. We're also going to be doing some index-based things, and we're going to figure out how we push down the cap spectrum to bring exposures to clients for what they want. We tried to file for a Solana ETF. The SEC didn't seem ready for that. We have filed for.
But you just sue them, right? That's what happens?
Well, there's a little due process there.
Okay.
Yeah, we accepted that for now. But our GDLC product is a product that we have filed that is in the 240-day kind of waiting period. That's a product that has 5 assets inside of it, and we think has a good chance of approval.
I've watched a lot of elections since I moved to this country nearly 40 years ago, and I've seen an awful lot of election promises, and I've seen an awful lot of election promises that were broken the moment somebody actually became president. I have no idea what the next administration is going to do. I don't think that anybody really has a clear idea at all. Are tariffs a threat that might offer leverage in terms of negotiations, or are they something that has already been decided on, for example? I think that what State Street is doing is essentially what all of our clients are doing. We're in wait and see mode because I don't think any of us know what's going to start happening on January the 20th.
All right. That concludes this episode of Trillions. George, David, Simeon, thank you so much for joining us.
I don't think
Thanks
we
a
left
lot.
any blood on the stage.
No, good.
We'll get them all out.
Thanks, Jimmy. Good time.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. We're on Twitter. I'm at Joel Weber Show. He's at Eric Balchunas. This episode of Trillions was produced by Magnus Hendrickson. Bye.